What's going on, everybody? Absolute pleasure having you. I was just thinking I have my shirt, which is Broken Duck, and then two screens. It's as if I'm not going to let that get by. But the truth is, I have about, you might see in a lot of the videos I have, I'm not wearing the same damn shirt. I have a box of these shirts. I actually sold more than I would have thought I would sell. It helped me actually start this place a little bit. But the point is that when you have it, it's because I'm wearing what's mine, right? So I don't have to wear Nike or anything else. It's just nice to literally know I'm wearing my own brand. And so I have a box of them and I'll just wear them wherever I go. All right, let's look at this. So a couple of people asked about Bollinger Bands. And what Bollinger Bands is, they're just a basic setting. In fact, they're such a simple thing that sometimes it doesn't seem anything that simple could actually work that good in some cases. Now, there is a lot of experience that you have to get. Like, I'm talking about like the feeling experience of like being in the stock market and watching shit move, timing it for a while. You kind of get that. You're never 100%. I always say that. But so you do sometimes get that feeling, you know, that something's right. And that's the experience, because you there's more to it. You just recall like certain situations that you in where something went up, then it dropped, or it does this, then it's that, or it was a failed trial instead of a, you know, and it's just, you learn from it after a while and it becomes like ingrained in the way you perceive the market. Well, when you look at the Bollinger Band, sometimes it makes you think it seems too easy, but it's not, because you do have to have the experience to kind of know what to look for. Today I'm going to show you one thing to look for that sometimes almost seems wrong to me because of how right it would have been if you look at over like the last few days. And this is why. If you actually take a look, so you can go into something, let's say go to, for instance, let's do Facebook. All right, let's do Facebook. So we don't want to necessarily do the very small ones because, you know, they're so volatile, but they do work in this too. But hold on. Remember, that's AEITI, AETI. The reason American Electric Technologies, the reason why I said that was because, remember, it went out of the Bollinger Band. It was like a whole candle out. When something gets a whole candle out, I don't like it anymore. All right, so here we go. It gets right. The Bollinger Bands are the red band on the top, the little red band in the middle, not the, okay, let me show you. I'm actually get rid of these right here. Get rid of these. Okay, so now all that's there is the Bollinger Band. The way I got the Bollinger Band on my screen is if you go to the little gears right there on the right. I show this in a lot of videos. If you watch my videos, you will see them. And it's basically the same thing. That little gearbox right there. We might as well go through it though, since we're going to start from the bottom up to the top. There's your gearbox. From that gearbox right here in the center, once I click on that gearbox, the word indicators will come up. And you want to click that button here. I'll show you how that works. So you boom, and then indicators right there in the center. Did you see it? It's right there in the center. You can't miss it. All right, so indicators right there. This one. All right, so you take that one. Hold on, get out of here. So you take that one. I gotta put, dude, you figure I would by now, after all the phone calls I get, I don't though. I don't hit it on, what is it? Do not interrupt or something. All right, so check this out. If you look at what it did, when you hit that indicators button, which is right there in the center, it gives you settings to put into your chart. Lower chart would mean, so on the, see how you have the right on the right it's upper chart, on the left it's lower chart. Lower chart would mean stuff like the RSI, MACD. I mean, there's a lot of things that could appear down the Williams percent arm. All kinds of stuff can appear on the bottom. Of what that basically tells you is like how heated up something is, helps you with oversold. Understanding those things, nothing's a guarantee though, ever. It's like you need combinations of things for them to work properly. But so anyway, so you have lower chart and upper chart. You would click upper chart because you actually want it to be on the candles. And candles are upper chart. So anything that you want settings wise that you want to appear with the candles has to be under the thing upper chart. So we go into upper chart. At the very top is the word Bollinger Bands you see with a check mark next to it right here. If you look at that, all you have to do is click the little I. Now, I understand you may not have TD Ameritrade, but I swear the other ones have to be fairly simple. I started with Scottrade. Scottrade was bought by TD Ameritrade, and I learned it like overnight. So you can always learn these things. You just kind of got to dig in there if you don't know how. Now, you're not going to have some masterpiece fucking signal sending every single time there's about to be a pump, something warning you. You're never going to get that shit out of this. And personally, I don't think that exists. But what is the case is you'll be able to at least see these little cues that will go, oh, you know, there's a reason to sell. And then what you do is maybe you sell on that signal like 5 times. And then you see what the percentage you were right. So if you're like, damn, it was right 3 times. That is a fantastic 60% of the time, which is greater than 50, which means something like that could keep you profitable. So let's take this for instance. We have the Bollinger Bands right there. Okay, we're going to click this little eye right there on the right side. If you click that eye, you see that it gives you settings. At the top, it says deviation. This is literally like the standard deviation. A standard deviation is, okay, something can be within this range, but I'll give it 2 to move. 2 could be 4. 2 can be a lot of different things, but what it's saying is that it's a certain distance away from the exact thing. So what it allows is deviation allows the numbers to deviate and still give you an idea if that's still in the range you're looking for. Period is the amount of time, so 20 days. You have 20 days is what it's covering. So in that time with a standard deviation of 2, it gives you these lines right here. Now when you look at them, you'll find that they're not always 100%. No, they're not. I mean, very clearly, nothing is 100%. That will never change. Never going to be possible. But look at this real quick. Maybe it is. Maybe there's some supercomputer that figured it out, and these Wall Street dudes are buying it for, you know, like $50 billion. Here, check this out. But if you look at it from this time, let's just look at the areas where it went to certain ranges. Right there it came out. Right there it came out. Right there it popped out. Right there it popped out. All right, now you have these, but remember not to look at them in the long term. In the long term, or you could look at it in the long term and go, you know what? These holds, bets for or against the stock should be long term. But if you actually look here, what the Bollingers can be good for is very short term stuff. It allows you an opportunity to try to make a decision in a short period of time that can give you some help in having a larger return. It can lose you money though. Obviously it can lose you money because you're in a tight range. Where you would be striking would be, you'd be striking in areas that are actually, for the most part, out of the money, but with a short time left, like with a week left or 2 weeks. Doing that is actually a very risky move. And a lot of people who trade options tell you, fuck no, don't do it like that. Time it long term, you know, do it this. Some of them do like put call spreads, but on very long distances, all kinds of stuff. So if you consider that for a minute, you would be potentially using this for short term only and for small contracts. If you did that in the short term, it might have touched right there. So right there in that area right there where it touched and popped out of the Bollinger Bands, which is the red line right here. There's the red line. If that was right there, like right there, if you bet against it, then the very like next day it'd be down dollars. It would be down, my God, almost $6, $7. It'd be down. That move right there in a very short period of time could have been 1,000% move. That's the thing. They're hard as shit to know the story when you look at the long term, but on the short term, the Bollinger Bands is actually very effective. And this is what I was thinking when I saw this. This is another bit of adding to options, the way to look at options. Look on the 1 day of a lot of the charts. If you look at the charts on the 1 day, look what it does. It initially cracks the top or bottom of a Bollinger Band and then goes the other way. And you can see it right here. Look tight right there. At the very open of the market, it pops up out of the Bollinger Bands and then it spills. Oh, let's back that up. It spills and then it continues to spill for the rest of the day. And look where it goes. It pretty much never goes back to the top line all the way, but just getting rejected around that mid-range of the Bollinger Bands and then totally being rejected by it towards the bottom. Look at this. Boom, boom, boom. Just rejecting it. When you see that, that is a very bullish signal that the mid-range of the Bollinger Band is no longer letting the stock have anything. So in short time frames from here to here, you put it. Does it seem possible? People do it all the time. They're very good at this. They put, pop. They'll lose on like 40% or 30% of them, but they're winning on more. And they're doing it little spurts. So they're not losing too much and they're not gaining too much, but they're winning all the time. That's how there's option players that know how to do that shit. And they're making a boatload of money. I mean, of course, a lot of them are probably artificial intelligence owned by the hedge funds or the big banks, but I think there's a lot of people that are managing to get little pieces of the pie too. So you looked at Facebook, we saw initially the Bollinger Band break, and then boom, down. Now watch this. If you go look at Apple, it was the same exact thing. Now I'm talking about the big names, because remember, you could invest penny stocks and lose the same amount of money, or you could buy what is essentially penny stocks for giant companies that are very well, funded and run, and you're buying the penny stock, and it's like a short distance, very, very, very volatile thing, right? But look at that. You saw initially there, boom, boom, drops down on Facebook. Now look at Apple. Hold on one second. There it is. I forgot where my water was. But look at Apple. I know I'm getting into this. Like, I literally need a drink. I'm so hyped. Like, I'm going back in the ring. All right. So look at this right here. You have Apple immediately doing the same exact shit. Just immediately doing it. Boom. Look right there. And then look at how it does it, and look what happens. Boom, boom, boom. It makes it there, but this is a deep break, so it went higher this time through it, because look at the break. It literally broke out of the Bollinger Bands, the bottom. So obviously that was more oversold. Like, they didn't like those conditions, brought it back a little bit harder, almost potentially got some kind of slingshotting to the top. Doesn't win. Watch this. Boom, boom. Just being rejected. And the same thing with Facebook. After so many rejections, people realize, like, the machines kick in. It's almost like the algorithms are like, there's a fucking malfunction in Apple. We can't break this area. Fucking sell it. And they just start selling in tiny blocks, 300, 100, 100, 100, 300, 100, 140. It's like just spilling them. And then all this bouncing back. It's just crazy. But the point is look, even at the end of the day, another break. Finally. Here, mostly rejected. But look at this. Finally, when it breaks out, on those two candles again, look, it's broke out there out of the bottom, and look at the pushback at end of day to just clear up their short positions. That's a problem. And so look here. Look at here. We'll go to who do we do? We did Facebook, Apple. Let's do, I don't see a lot of the Johnson & Johnson was doing, look at this, Johnson & Johnson, the one that I initially wanted, and turned out to be a horrible play in the end, but it's okay. It happens. So check out this. Watch this on the 5-day. Motherfucker. Look at that. That's a bad thing. Just like you saw with all of the other ones. Opening up and cracking the top of the Bollinger Bands is a bad thing. Look at this. Every single day. Well, here it's the initial loss. We think we got something. Boom. Oh, it broke the Bollinger Bands. Watch this. Boom. These are days. This is day 1, day 2. 3, boom. And then look right here. Nothing. Now it has its worst day. This is a total sell-off because everything else was too. But look at that. Broke it, drop. Broke it, drop. It came back up a little bit, but it was drop for the most part. And then broke it, then drop. I'm telling you, these Bollinger Bands will tell you something when the market is the way it is, because it's in a tight space. So if the market is flowing and money's flowing, policy's flowing, fuck yeah, bro. We just can bet this thing and make it solid. It'll be hard to go up, it'll be hard to go down, but for the most part, we'll be going up. But it'll almost be difficult to believe it because we're just going to keep going up, like has been the case. Then you get a situation where, we're not going to cut interest rates full 0.5%. Straight up, people are like, well, that's what we expected. I feel like someone saw something coming sooner, because look at that. You can see them in these big pops in the day where it pops up, and then that's when they spill their options. It is like a force where they literally purchase stock or cover short positions, drive it up, and as they're covering the short position and driving it up, they have call options to eat the height of the initial pump in the morning, and then boom. And yes, it's not going to be happening with a lot of, but the ones that have high volume, like the Apples and the Facebooks, high volume, it could be happening. There's a lot going on in the morning right there, those initial pops and drops. That's how a lot of people making money in options, and obviously the stock as well. All right, so one more thing we wanted to look at was Merck. And these are big companies for a reason, but Merck, the reason why I wanted to look at it, because a friend of mine a follower of mine on StockTwits had asked me a question about it, and I was like, be careful, because I didn't like the way it came at its middle band of the Bollinger Bands. And that's what I mean. The Bollinger Bands have a little bit of, I don't know what you would call it, but they have a resistance. That 20-day resistance is strong right now, and you can see it here too. Watch. initially it goes to it, and this is just a middle band. I know there's a lot that go above and below, I get that, but these are good examples of big companies reacting strongly to their Bollinger Bands, which is a good sign because it's something you might help you predict a little bit better about what you want to do and kind of commit to something, make you commit a little better so you're not just in the dark. I think it might go up, I think it might go down. You're kind of like, well, it is at the top of the Bollinger Bands, and news really isn't that good right now. And, it could turn around, but I don't really see when. So, even if it's a week or two, and people kind of come to the conclusion, well, I'll try a put here, or I'll do a call here. And these can help you on that track to make a play that cannot just be done overnight, because they can be worthless, go to valueless very quick. They can be done right. But in the end, doing it the way like this and trying to find that little bit longer term of something is definitely the right way to go. All right, so there it is right there. You can see it being rejected, Merc, boom. And then the next day, it just taps it again, and it's done. And you saw a lot of stuff done at the end of Friday, but that's it. That's like the whole playbook right there of how Bollinger Bands, I showed you guys how to set it up, but kind of like how you look at them in the bigger picture of the bigger stocks, rather than it being something to try to time, like a penny stock play, which they actually work for that sometimes too, but there's a lot of factors that go into that, specifically the pumping side of things. But let's go with the fact that these are bigger companies, and so you should be focusing on them. They're the ones with all the money. They're the ones who make the biggest moves in terms of the market, and they're the most stable. So if you utilize that, you could actually be a lot better off doing this than just trying to catch the next thing that might pop. So look into it and then try to use it that way, but test it very small in the beginning, and then of course grow up from there. I hope this was helpful. I mean, it's really the best I could do, to make you realize this is right here in your mobile app. So you don't need some major system. You don't need no shit like that. It's just right here in your app. All right, guys, I love you. Peace.